gentlemen. Michael's introduction was probably as much as we need, but I'll add a little bit of context. We're going to talk about the viability of Bitcoin as part of a retirement investment portfolio and retirement plan. Especially if you look at today's ludicrous price movement, you might be a little bit questionable on that. But ignore the roller coaster. Let's think 30 years out. My caveat is that this panel will be pretty US-centric, given we'll probably talk about 401ks and we'll talk about IRAs. So I'm joined by David Ramirez, CEO of For Us All, and John Haar, Managing Director of Private Client Services at Swan Bitcoin. I'll ask them for a very brief introduction after this, and then we'll get to it. And for me, I'm George Kalutis of CoinDesk. So David, go ahead.
Yep, so David Ramirez from For Us All. We are a 401k provider that allows direct investments in cryptocurrency. I think basically 15 basis point trading, tax-free crypto investing forever with Roth dollars has quickly made us the leading 401k of choice for some of the largest and most successful crypto and blockchain projects.
Cool, John.
Yeah, John Haar, part of Swan Bitcoin. Joined Swan a little over a year ago. I'm part of what we call Swan Private, which is where we help high net worth individuals onboard to Bitcoin. We help them, we're a partner on their journey. We can help them with things, all the types of questions that they're going to have, rather than sending them to the interwebs to figure it out on their own. We are their partner along the way. So, Bitcoin on-ramp, we do a lot of research and education as well. Some of you may follow Swan's content out there. And then background-wise, before I joined Swan, I spent 13 years at Goldman Sachs in New York City, so made the leap from Wall Street to the world of Bitcoin.
Cool. So I think the best way to break up this panel is in 3 sections. Why, how, and not so fast. So let's go why first, the investment profile of Bitcoin. So David, what is the most compelling investment merit for the everyday person when it comes to looking at Bitcoin as an investment product for retirement?
For retirement, well look, if you're an economic historian, you might argue that Bitcoin is simply better money, something that frees all of us from a fiat reserve banking system that has been mired in crisis, inflation, and government confiscation of property. If you're a financial economist, you might look at Bitcoin, see that it has high risk-adjusted returns, low correlations with traditional assets, and say, hey, it's a great portfolio diversifier. I began my portfolio management career working for Nobel laureate Bill Sharpe, who came up with modern portfolio theory. I'm a bogglehead. I really do believe that you're better suited investing in the overall market as opposed to trying to outperform the market. Now, here's the thing. The global market portfolio has a measurable allocation to cryptocurrency, which means that if you exclude that from your portfolio, you are in fact taking a bet that the market is wrong. Now, you can take that active bet, but you better understand what you're betting against and who's on the other side of the trade. When I looked at blockchain and cryptocurrency, what I saw was a potentially transformative technology early in its adoption cycle. It's not guaranteed. Transformative technologies have traditionally been slow to adopt, a lot of volatility, but it does contain the potential for outsized returns.
So you touched on a lot of topics that I think John would also echo, but I want to ask you the same question. Bitcoin and retirement account, but for the clients you work with, the private client, the quote-unquote high net worth individual client, is it different? Is it the same?
Yeah, ditto to that. I think this question of how do you frame Bitcoin to someone, what's the attractiveness, you could go a lot of different directions with it. I think the digital gold narrative is a good one. There's different people that have different levels of patience. So it depends on who you're talking to, but I like to say it succinctly that a self-custodial, finite supply, digital, monetary bearer asset that is outside governments and banks, you don't need them to own it and move it, is highly, highly valuable. So over the long term, I think Bitcoin will become a globally dominant form of money, but you don't even have to get there with people. I think in the near term, the way I frame it is that more and more people will wake up to the fact that having an allocation in their portfolio to what Bitcoin is, a form of hard money, all those things I just mentioned, In the near term, they're going to say, you know what, it makes a lot of sense for me to have 1, 3, 5% allocated to this. They don't have to say, tomorrow I'm going 90% Bitcoin. So that's kind of the framing. And yeah, I think from here, it's actually hard to make the case. I like to flip it around on people sometimes. I say, why do you think that Bitcoin is going to stall out at 550 billion market cap or whatever it is today, and see if they have anything interesting to say back.
Right. So John, you talked a little about market cap, and I think this transitions well into what we're going to talk about next, the how we invest in Bitcoin for retirement. But David, you also mentioned investing in the broader market is the safest way to go, the way that feels normal. Everyone sees the stock market going tick, 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 up to the right. Today, we saw Bitcoin go up to 29,000, and then it just back down to 27. The what's it called, the Bart Simpson shape, right? Mm-hmm. How can you possibly say that that is an appropriate asset for a retirement account for someone who, when they retire, they're not going to want to have that kind of price oscillation?
Yeah, so look, clearly Bitcoin, crypto, significantly more volatile than a broad-based index of stocks. However, I could also name a number of large, very prominent technology companies last year that declined more than crypto. Nobody's saying that we should not invest in Netflix, Meta, et cetera, in a retirement account. I think while risk is important, what's equally as important is overall return. Luckily, Bill Sharp came up with the Sharp ratio that helps us really look at risk-adjusted returns. When you compare Bitcoin risk-adjusted return over a 4-year holding period to major traditional asset classes, what you see is almost in every period, Bitcoin had a higher risk-adjusted return. Combine that with the low correlation to traditional assets, a small allocation can materially improve the expected return of a portfolio without materially increasing risk.
Yeah. Let's move on to how. So I'm going to throw it to you, John, first. I know it depends, but what do you think is generally the best way for someone to invest in Bitcoin specifically for the retirement? Whether it be accounts, whether it be strategies for DCAing, what do you think? What's the general advice you give?
Yeah, sure. So we, I'll just mention if people want to take more time to look into it, but we at Swan just came out with an article specifically saying the questions you should ask if you're going to put Bitcoin in your retirement account. But I could give some of the summary. You want to know, are you owning real Bitcoin, or are you owning some sort of proxy, what we call paper Bitcoin, some sort of trust like GBTC? That's obviously a huge question. You want to know structure. Ideally, you would want to have your account be with a trust company that you have legal title to that account in your name. You would want to know about custody, and this is a huge one. We could talk about this for an hour, but custody, it's currently, I'll phrase it this way, it's a gray area as to whether or not you can take self-custody of Bitcoin or really any asset in an IRA. And people have different approaches, so I would just say if you're going to go the self-custody route of Bitcoin in your IRA, just make sure you understand the regulatory gray area that exists for now. That's why most of the products you see for IRAs are custodied with someone else. So then you obviously want to look into who is that custodian, how do they do things. Fees is another huge question. There are some players out there that charge 2% annual fee to hold Bitcoin and crypto in a retirement account. I think that's a huge, huge fee that's going to eat into your returns over time. Doesn't need to be that high. So those are some of the things you definitely want to be aware of.
Yeah. So David, John talked a lot about IRAs just because that's what Swan typically deals with, but you at For Us All tend to focus on 401ks. So anything to add there that's maybe slightly different, or maybe it's the same?
No, I think to a certain extent, focusing that whatever solution you use is using a reputable, qualified custodian. Clearly, I think we've all seen over the last year how important that is. I think coming back to the core question, like, okay, so you got money that you're going to set aside. Where should you put it? Should you be investing in a taxable account, a retirement account like an IRA, or a 401k? I think IRAs and 401ks are, in many ways, a really great place to make some of your crypto investments for two key reasons. Like, I'll say it again, tax-free crypto investing forever with Roth dollars, pretty compelling. But even more than that, it can be an effective way of lowering overall portfolio risk. And here's why. When you're trading in a taxable account, let's assume that you buy BTC at the beginning of the year, doubles in price, you sell, you roll it into ETH, market collapses. You may find yourself at tax time owing more in taxes from that first leg of the trade than you have in crypto. You didn't know it, but you actually just took leverage in your portfolio from Uncle Sam, and on April 15th, you might get that margin call, forcing you to sell some or all of your crypto precisely when asset prices are the most depressed. IRAs or 401ks, you don't have that risk. It's tax deferred, allowing people to better ride out the highs and the lows of the market.
I want to ask a follow-up question because I think there's a very important psychological benefit to investing in 401ks over IRAs when it comes to you deduct it directly from your paycheck. So you don't have the psychological bit of, okay, this money is in my checking account and then I have to put it into my Fidelity account, say, and invest in an IRA. Are you guys privy to the behavior of your customers when it comes to they turn on the crypto investment and then they turn it off, or do they turn it on and keep ratcheting up? What is the general behavior of your customers?
Yeah, so we were talking about this a little bit earlier. You know, last year was a really interesting time, especially when FTX happened. On Thursday, we met with our product engineering team. We said, oh my gosh, we need to make it super easy for everybody to get their money out of crypto into traditional assets. All weekend long, engineering product team building new feature called the Eject Button. One button sells all your crypto positions, goes back to traditional assets. We launched it on Monday. We've had very few people actually exercise that button. We haven't actually seen any material amount of people lowering how much of their money is going into crypto. And I think that's one of the benefits of the retirement plan, particularly when you're thinking about a very volatile asset, is that people are trained to have a much longer term view and are less likely to overreact to any ups and downs.
I want to inject a little bit of cynicism or just a question I have in general about putting Bitcoin in retirement. You, John, you talked a little bit about self-custody, but I'm not really even thinking about that. If we, Bitcoin maximalists, which I think I fall under, you might fall under, David, I'm not quite sure. If you believe that Bitcoin is going to, be the global reserve currency of the world, there's going to be sat to acre parity, does it really matter if I have it in my IRA, or would it be better to just have it separate, and then once my wealth, say 100x's, like I can just retire whenever I want rather than waiting for retirement age? Is there really a benefit of putting an IRA, or?
It's a great question. I think different people are going to come to different conclusions. I would say, as kind of an overarching statement, why not both would be my kind of answer. Do a little bit of both. There's also people, you have to think about what the starting point is, because if someone is saying, I'm very young, I just started working, they're basically starting from a clean slate. You could have that debate. But there's plenty of people who've been working for many years, maybe for decades. They already have a retirement account. Maybe they just left a company and they rolled their 401k into an IRA. So those funds are already within the IRA ecosystem. So unless you're going to take them out, pay the taxes, pay the penalty, they're already in an IRA. So if you want the exposure to Bitcoin, you're already there. It's just a question of asset allocation. And then otherwise, it's really a question of debating, do I really want everything to be in self-custody? Yeah. I think you debate what are the odds of some really dramatic scenario happening where I need all of my Bitcoin in self-custody. You have to weigh that against the tax benefits that you get from the retirement account, which is very valuable. So different people will come to different conclusions.
Yeah, I think that makes sense. David, you invoked Uncle Sam, so we're going to talk about Uncle Sam. We'll move to the last section of this, the not so fast, policy and regulation. It's been kind of a hot button topic in the US especially. So John, what are you most concerned with when it comes to crypto and Bitcoin policy in the US, right? Odd money transmitter rules that don't really allow people to run Bitcoin, or is it KYC, AML, is it something else entirely?
Yeah, so this is a huge topic we talk with clients about. They want to know what our thoughts are, what can and or will the US government do as it relates to Bitcoin from a regulatory perspective. Very long topic, but I would say my general view is that it is, rather than the government coming and saying Bitcoin is now banned, Bitcoin is illegal, a 1933 Executive Order 6102 type thing, yeah. I think that is very unlikely. I think what is far more likely is that the government will come and try to KYC, AML, big time, make sure people are paying their taxes. I think that's far more likely. than the dramatic scenario where it gets banned. And on this point of regulation, I just wanted to throw out there, I do believe that there is something beneficial to Americans. Again, we're talking about American regulated retirement accounts here. The more Americans who own Bitcoin in their retirement accounts, I think that will make politicians question doing something dramatic and negative to the treatment of Bitcoin. It might even make Elizabeth Warren think twice before she sends out some, maybe not her, but
right.
other politicians will say, wait a minute, 75 million Americans own Bitcoin and crypto in their retirement accounts. Like, okay, maybe I won't touch that because that's kind of a third rail of politics. So I think that's something just interesting to think about.
Yeah, I think that makes a lot of sense. David, I want to throw the same question to you. What's keeping you up at night? Does Elizabeth Warren's anti-crypto army keep you up?
Yeah, so I think maybe two things. One, I disagree somewhat slightly. I think it would be, I am concerned that the extent to which something like Bitcoin does become a real threat to fiat currency, and it's perceived as such by central banks. I think we have historical precedent for governments trying to preserve their ability and their monopoly on coinage. That said, with respect to retirement accounts, what we've seen over the last 15 years has been an increasing politicalization of retirement accounts. We saw that going back to the first Bush administration, then Obama, now Biden administration, where you see changes, at least with 401k plans, on what regulators want to have in a 401k plan. You can look at ESG. ESG bad in 401k, ESG good in 401k, ESG bad in 401k, ESG good in 401k. ESG has not changed. It's just the party in power and their views on that certain asset class. We're seeing the same thing with cryptocurrency. And that, for me, is a real danger. If I asked everybody to raise their hand and say, who has 100% confidence that Social Security is going to provide your retirement, nobody's going to raise their hand. It's our responsibility to save for our own retirement. We ought to have the freedom of choice to invest how we see fit to get there. That's only going to happen if people take political action and make sure that parties on both sides of the aisle keep their hands off of our retirement and essentially preserve our freedom of choice to save and retire the way that we feel is best for ourselves.
So as a follow-up to that, do you think that the 2024 election cycle will include some sort of crypto platform or debate around crypto and Bitcoin in general, or are we still too early in that case?
It's interesting because I think to an extent, cryptocurrency still is not an entirely partisan issue. You see very thoughtful folks on both sides of the aisle that are really concerned about how overregulation may put our nation at a structural disadvantage in what could be a very transformative technology. I love Biden's first executive order, where one element was we need to ensure that we maintain our global competitiveness, and we need to ensure that the financial benefits of financial innovation are shared equitably by all. I think if we all, on both sides of the aisle, stay true to that, then I think we'll be in a good place.
Yeah, that makes sense. I think there's still a little bit of time from us to make up for the lost time we had during the day, so we're going to have to wrap. We have about a minute left, but I want to ask each of you, if someone didn't listen to a single word of this panel and they only just now snap back in, what do you want them to remember? What you said, John, and then you, Dave, and then we can wrap.
Yeah, so for me, it would be the fact that a self-custodial, finite supply, digital, peer-to-peer monetary asset that you can move without the need for governments or banks is a new thing in our lives, and it is a very, very important thing. I think it will continue to accrue value as time goes on. I think you want to own some of it in your personal account. I think you want to own some of it in a retirement account. And it doesn't need to be, you don't have to go 80% Bitcoin tomorrow. It would be, we say get off zero, because I think the case to own zero is very, very hard to make. And I think the case to own something higher than zero is quite compelling.
David, final word?
Tax-free crypto investing forever with Roth 401k contributions.
I like it. We'll leave it at that. That was David Ramirez and John Haar. Thank you, guys.